to be with you, great to be with you, great indeed. Yes, it is Wednesday, that's right, Wednesday, and what have we got for you today? Well, it's big stuff going down, and we'll come to that in a minute, and that's going to involve chart share, and we do it live stream with chart share. That requires a major investment in broadcasting materials, which we love to do. So give us a like for appreciation in terms of the fact that we'll be doing a live stream with chart share with you, as we always do with these amazing live streams. But I'm going to be talking about another gentleman that does some interesting work every now and then. Occasionally I check in on a newsletter he does, and he reminded me of something kind of interesting. So I'm going to talk about Gregory Mannarino was looking at some paperwork he received from Bank of America, and also a note from Deutsche Bank. That's right. And what did he say? Well, in our everyday daily updates, which I do with video, charts, voice messages, and 100% of other versions of all forms in our community, I actually started this update highlighting this point that Gregory Mannarino was making. Now, the audio may not carry, so I'm going to repeat what he says. I've also put on subtitles so that you can read as well as see and hear. But I'm going to be going over it, just a short snippet of what I included in our morning update this morning. Possible that me email and I was a US post coding system.
You need to pay attention to this. You all know how I always say, we're kidding here. They're advising the clients to buy gold.
Okay. So the first part you might have missed, it said Bank of America. Let's see if I can get him saying Bank of America.
Market report, people, things are happening, and we need to pay attention to this. You all know how I always say, raise your awareness. And it's going to lead up to something else here. So we found out yesterday that Bank of America here, our favorite Wall Street bank, and I'm kidding here.
So Bank of America is saying on its investment notes, one can only assume, buy gold. Now, the interesting part about that is that banks aren't part of that old gold system. They don't make any profit out of buying gold. Most of them are not selling it themselves. They might hope that you buy the ETF instead of the actual physical stuff. But what we do know is that it's not advice that easily makes them money. But if they say an equity and you go to your Bank of America trading system or one that they've partnered up with, they probably get a little bit of an earner. So it's very interesting to hear that. And I'll tell you my take on why they might say it, because there's nothing earner in it. And it's talking about lack of trust in fiat and the banking cartel system. The hedge, it is an insurance policy against collapse. So that's point number one that Greg was highlighting. If you're a follower of him, tell him we gave him a bit of a mention and a shout out here today. They can say, gold against in a little bit.
From our own central banks. Now, the reason why this is so unusual, you need money off of this, telling people to buy.
Let's go. This whole discussion a little bit. So let's just. But 20 back. Jumping around a bit. Sorry, guys. I want to. A demand-destroying event. So another member of the banking cartel, Deutsche Bank, are actually suggesting shorting treasury bills. So let's just be clear. You're going into an interest rate cut environment where, in actual fact, that's going to require proliferation. You're going to get an environment where the treasury bills will temporarily go up. They've already begun responding. How long and how deep will they cut? How much more movement have they got to cut? To share, because highlighting something we've far smaller than many coming into the debt markets from around the world, especially or potentially might to buy weapons to attack them with. So the weaponization of that system is certainly not going policies. And that is end of empire times. When people start to do, or you're supposedly doing real well, think Bitcoin 2017 December, $3,000, and it started the year at about $7,000. That is $150,000 tax bill. When would that tax bill arrive? Well, round about a year later, you probably would have had to pay it. August, September of the bear market year, that was 2018. And in actual fact, in our we had a short setup on the 6K round about November, and Bitcoin dropped from the 6K level, traded 3,200. Great profit trade for us on the short side during that period, and we actually streamed, like we're doing here, from our theory weekend in Cyprus with everybody present, many of them that were short, making out like gangsters, and the community during that period, a halvening again of Bitcoin. Now imagine you had to pay 150 grand where you had invested 100 grand at 3K, and it's back at 3K again, 3.2. Call it for want of a story. So you owe the taxman 150 grand. You would sell all your Bitcoin and get back your original 100K investment, and you would owe a further 50 grand. And when you phoned and said, but, I don't have those gains anymore, they've disappeared. They'd say, as of the mark to market, at the end of December 2017 and 18, your assessed gain was $600,000. Therefore, you must pay the assessed gain. However, if that assessed gain has gone away, you can have a credit against future Bitcoin-only gains, not on your house, not on your art collection, not on your gold, not on your property. On that specific digital asset category that they've defined, you can have a pre-credit. So in future, if you ever get to 20K again, you'll be good. And you say, I'll never get to 20K again. I sold all my Bitcoin to pay 2/3 of the tax bill. I've taken out a loan for the other 50 grand. You've just pumped the interest rates up on that loan. I'm still paying off that loan on top of my housing loan, my subprime car loan, and every other loan. And I'm very unlikely to ever get any benefit for that credit. This is the clipping of coins, guys, the end of empire. The clipping of the gold coins are in effect the end of empire. Unrealized tax gains gives them the ultimate power to determine what a valuation is and to take money from you before you've even made it. Because anything that's unrealized is entirely speculative, could disappear at any time, and the more volatile the asset, which is why I use Bitcoin as an example, the more likely you are to be absolutely reamed. And isn't it funny how crypto often peaks at a December period, which is kind of a year end, and then the following year has the bear market when you're most likely to need it. Perfect for you will own nothing. Yes, and we'll put you on the happy pills. Anyway, long term, borrow long, that's typical for mortgages and that sort of stuff. And then borrow short ones, and wow, has that thing lost value? You have no idea. But anyway, back to this. What happened with the first touch of the yen carry trade unwind? That was the first moment of potential reversion, but it was quickly rejected and put back in the box. And remember the VIX on the S&P, how it super spiked, went almost as high. Only two higher spikes was the CV19 and, of course, the subprime spike. That goes a long way back, to 2007-8. That was the chart. Yeah, only two other events, but it came straight back down. Crushed the VIX right back down. We're all calm. We just crapped the bed real hard, and then we just sobered up, and we're like good, like Fonzie's good. And that's what happened. And so that's kind of what happened. We pulled back in. It's been our underlying thesis that you are going to be reverting on the 10s and 2s, and that this is a continuation structure, that you actually bottomed on a double bottom over here. You probably got a double bottom over here. Also to consider technically with an upside target that will generate a major move that will take you quite clearly to the upside, and you are now winding up on the said neckline to make that move. And in fact, not only are you winding up, you've broken. You've already hit part of your target by touching the zero line, and you are now moving strongly back to reversion of the great differential in the inverted yield curve. And why is that so important? The dark blue line right here with all our alerts. Why is that so important? It is so important because the crisis comes as a leading indicator upon the reversion of the yield curve. You are watching right now the final moments of what has been a lengthy inversion. In fact, the first inversion happened super quick and bounced back out in April of 2022, and from July, which is roughly mid-year, beginning second half of mid-year 2022, all the way through all of 23, all the way through all of 24 so far, up to roughly the same point, August, that you are today. You're talking about a 2-year inversion of the yield curve. Such is the problem around debt. That is now, for the first time, reverting or about to, on the 10s and 2s, to revert positive. And you are just awaiting the name, as we said on the dead zone, the big destructive moment coming in our thumbnail. You are just awaiting the name of this next crisis. It could be any of an entire buffet of reset topics. There are umpteen examples. The purpose of this video is not to explore them all. It could be the second stage of the yen carry unwind, which just means more of the same. It could be any of the disease options that involve malaria, mosquitoes, monkeys, you name it. Every little fantasy that these biological psychopaths have put together. It could be bank failure, it could be debt failure, it could be war, it could be you name it, you name it, you name it. You got all the examples. EMFs, it could be, who knows, it could be hacks, it could be anything. But that buffet you can argue about and decide what will be the reason. But a reason is coming, and you're here to be made aware of it. So I want to take at this point, that's quite a scary headline. Francis is just scaring everybody. Well, I want to say a couple of things to you while we're at that point about being scared. If you're feeling scared or anxious in any way, it's an absolutely normal reaction. And I can tell you that the way this world is set up, with so many risks to the downside, it's unfortunately inevitable. We feasted in the early stage of this absolute cycle of abundance, financialization of everything, leverage of everything, and you end up toxic at the end. You can't binge drink and feel happy and be the king of the party and then not expect to have the hangover. And we're in the hangover stage of this economic cycle, guys. So calm down. It's just nature playing out, and every hangover does end eventually, and new real opportunities hang out and will be made available. So what do we say to you? If you're afraid, actually, we have a plan. We have a plan how to manage reset. And in actual fact, in the crazy moments where everybody's so messed up, actually some of the best opportunities exist. That's right. With the collapse of one system comes the reflation of a new system. Of course, they're going to know that they're pulling a dirty. Of course, they're going to try some totalitarianism. And we're here to tell you how to play that. So we can help you, guide you through reset season. That is our core raison d'etre, and build wealth, and more importantly, protect it during that period. That is why there's a link for you to click below where you can book a call and get engaged with us. Talk further about managing reset in your family's life and existence so that you actually get wealthier, you preserve it, and you move forward in a time where the masses who don't know what's coming will be going downside on the hill. So, important also to make this other point that it's not just the 10-year. The 30-year, if we do this, has already reverted into the beyond the zero line and is moving forward. In actual fact, it's my expectation that the 10 and 2, the 10 minus the 2 year, is the last of them and probably the most critical one to revert. So we are now largely reaching a point where nearly every major yield curve that is being watched has reverted. And what does that mean? It means we're about to find out the name of the next crisis. And it's just in time for September, October, and some people would say for election that they never thought would happen. I don't have a view on that. The election may happen, it may be stolen, it may be anything. All options remain possible for me, but I have noticed that a lot of people don't think that it has going to happen. And sometimes these things turn out are true, like fake assassination attempts and even real ones. Who knows? But what you'll spot is the orange square. Over there is the inversion. The red square is the crisis. So we are now awaiting, if this gets above zero, as the last one to move, the details of this crisis. So it is my opinion to you, as someone who watches this quite closely and understands, to say to you accurately, there is a distinctly far higher probability that between now and the end of the year, that means September, October, November, most likely, you are going to have a large crisis event. That's right, a large crisis event which will see some rate cuts and some proliferation, but rates not going all the way down. More proliferation than rate cuts. Why? Because the appetite for buying the debt won't be there, and the subsequent reaction of that new proliferation will bring a further pump to the risk on trades, quite likely to be especially gold, we'll be talking about that, but other assets, and it will bring the inflation blow off, and you're more likely to get the largest move you're going to get is going to be the interest rate spike rather than the cuts you might get afforded at this next Fed meeting. So, beware, demand-destroying event is quite possibly here. We've been waiting this. This is our key indicator for a while. We've seen the copper turn down. We've seen the yen carry trade start what might only be one leg of a far greater leg of unwinding, which could bring FX risk. We are actually seeing weak dollar already probably being in the cards. Why do you say weak dollar? Right here on this video, we are going to call a sub 100 and well beyond dip below on the Dixie. Why do we say that? Let's show you that chart again. So the Dixie blue line is here. That's the 100 line. There's a lot of other lines on here. I'll bring it up a little bit and maybe go to a 3-day chart so we get a little bit more detail. Why do we say that the Dixie is likely to go 100? Can't you see that it's actually going up today? Yes, we do see that it's actually going up today, and we kind of predicted it. So we discussed this week the lookout for the dollar during this week, and we felt Bitcoin and crypto could be moderate to iffy because of a slight dollar firmness. We saw the data that was likely to come out for this week, and we said they're still trying to calm everything down. There's going to be no shockers in there. It's going to be keep it calm, no big shocks. We'd had a major move in the euro versus the USD. We've got a setup for the pound versus the USD that we're going to be giving you. So the dollar is going to go into a period of further weakness, even beyond what it's done, in our view. That means it's going to run that low, which is quite a big call given what it did already. You'll possibly see that we had a rising wedge here that broke, a bounce, a pullback. It's continued to come down. We see dollar in double digits below the 100. Why? Well, one of the biggest constituents of that Dixie is the relationship between the dollar and the euro. You can see again this week a minor pullback, but the key thing you learn when you engage with us, and you might not want to learn things. Who wants to learn? Everybody says, oh, I don't want to go to school. I just want to make money. Actually, you never make money without getting skills. It's a sad fact. You don't make money without improving skills. As a chef, as a carpenter, as, brain surgeons, surgery is skills, and they've got to be practiced. You've got to learn what to do for 7 years, and then you've got to practice doing it and develop a good relationship in doing it. Everything comes back to skills. But the fact is, you can have fun. Instead of it feeling like school, you can actually have fun and enjoy it with people that are like-minded. Many of them coming from the tech backgrounds that have got amazing, interesting jobs, run great businesses. That's what our community is about. It's a great sifter for quality, and it's a fun place to practice and do what you want to enjoy, making money and learning at the same time. You have to. You can't learn theory to ride a bicycle. You have to get on the bike, but it helps to have the right people around you when you're on the bike, knowing when to support you and when to let you pedal. So this particular trade that we provided, we obviously in our community first, it was discussed, has triggered strongly and abundantly, and is making its way, and you can see from this at around 1.11 versus the dollar. If it's to go to 116.5, which is where our target is, and our default assumption, given a strong triggering event, beautiful strong triggering event over there, is that once it's in compliance with theory, the on balance of probability assumption that we put is the expectation of performance to target. So that is a fancy way of saying you may pull back a bit, but in the longer run, we think you're going to do what we expect you to do. That means you're going to run through, not to, but through 116.4, which could be 116.5. That tells you dollar weakness. So let's just summarize. We're calling a Dixie break through the 100, through the period low, which is actually a revision of our previous views. We spoke of a watermelon smile. This has come in and turned. This tells me the factors of the Japanese yen and the carry trade are probably not over. I doubt you could, in a couple of weeks, unwind the likely leverage of many, many years. Even though there have been sporadic unwind points, it does feel a lot deeper this time. So you could see the yen is going to get stronger again. We'll look at the USD JPY. But could we just be wrong on the euro because we're basing it on this? And this is where 360-degree analysis, looking at the same idea, but trying to see across multiple data points and alternatives whether we're getting the same take. And that's why we also have the pound, which is probably the old classic cable trade of millennia. It's been one of the biggest since the Dutch East India Company, and this is how that one looks. Again, upside HVF, and I'd argue the pound is going to potentially even outperform the euro a little bit, because this one says the dollar to 139 and some change. That could mean you get a 1.4. Don't forget, the low around here was at about 1.2, and at one point, you weren't that far off. What was the absolute low when we had the pension crisis? You got an absolute flush out of dollar longs on the 1.04 run. That was the pension crisis. Anybody who held pounds, so many people dumped pounds that moved so much money onto the sidelines and off the playing field in the pound space. Now you're getting this structure. Don't interpret this as bullish for Keir Starmer's policies and everything else, but they are going to squeeze the British. Where's my UK guys? Put your hand up if you're from the UK and you've been in your balls squeezed when the budget comes. Boy, oh boy, are they going to tax you guys. And by the way, this is coming everywhere, everywhere. Dead zone over here. Here we are. I'm watching your comments coming in, and I'll respond to a few later on once we've covered everything we've covered. The danger zone is here. You're about to revert on the most important inversion chart. That means a crisis is around to come. You are just awaiting the name. I'm the guy who watches leading indicators so that you don't have to. That's right. And I'm telling you, it's time to watch for the downside risks. And actually, the dollar is likely to go lower unless all these patterns fail. The pound, the euro, and potentially, of course, the USD JPY. We would need to see a violent return to dollar strength. But hold on. There's a debt problem with the dollar. There's too much. Every 96 days now, it's 1 trillion in new debt. Well, that's a problem. When you've got the geyser, remember the geyser, the hot water tank, and Granny Yoda Yehudi Yellen is piping in the debt so fast, it's like hot steam being poured into the cylinder, and its pressure is just building and building. And at the bottom of this, you've got 2 taps to release the pressure. If you're going to cut rates, you're actually saying debt is becoming more valuable. So on the debt tap, instead of leasing pressure by letting it devalue, you're actually increasing its valuation. You are actually forcing some of the water, steam back in through the debt tank by saying, no, 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 it's strong. What happens is all the pressure release is going through the currency tap. You have two taps, the currency and the debt one, and now you're going to have to let dollar go down, down, and down. Because if the value of the debt is going up, it must go up because you're cutting rates. You need to deflate the whole thing because it's going to blow, the controlled demolition. And you've got Yehudi Yellen, who's spending like there's no tomorrows, just bankrupting the nation state and inflating the canister. You've got to let that currency go, go, and go. And it's got to drop in value. That's what's going to keep a bid under the stock market to some degree. The dollar will be devaluing. But you could see some flow back into Britain that had its whoosh and scared everybody away moments that went with the pension crisis that we've already described. So, if the pound is to hit 139, guys, we've got so much debt that this amount of currency moves have far bigger repercussions than they used to. That's why currency markets have become so stale and moribund generally. That's why the USD JPY was particularly interesting on the yen continually weakening until suddenly it wasn't. And now the carry trade feature. This is what's going on. The debt and the interest rates differentials are ever more sensitive. And in actual fact, the consumer in America is pretty wrecked. Like we told you, the great lie was the strong labor market being the reason that you weren't in recession. And I don't see all the other analysts with their newsletters saying, so actually, we were in a recession like we always said. I don't see people going back to October 2023 and realizing it. Only we keep clamoring about it. They lied to you. They lied to you about labor strength. They did almost 1 million re-rating for the entire last year. And that was their reason for saying the recession didn't apply. So the consumer is now already in a pretty crushed state. So small amount of relief is not going to change much for them. They're not going to feel, woohoo, let's go out and spend. They are still struggling. In fact, housing is higher in relative to earnings than it was at the peak of subprime. So that asset class absolutely has to come down, especially in the places of Florida and all the hot spots, mainly red states where all the blue state guys are migrating to. That's right. Californians are going to Austin, Texas, like never before, etc., etc. Austin is a famous blue town in a red state. Okay, so this is what's going on in the world. Let's have a look at some of your questions. And the moment is coming. So what do? Well, there's a couple of things you do. If you're a speculator, rather speculate for downsides generally. That doesn't mean I'm calling a short, an epic short on the equities. It could have a volatile period. But remember, the dollar is going to take a large amount of that crash into account if it is the one that's going lower. So the dollar looks compromised. It looks like you could face 139 GBP USD. At the moment, you're at 131. So that's going all the way to the other side of the 30s, having just got on. As I've highlighted, not so long ago, you're at 126. The notion of 140 in a very sensitive cross-market environment, the dollar is going to need to drop immensely. What does that do for America as consumer of last resort? Well, A, their citizens are getting crushed. B, the dropping of the dollar means they've got less buying power on European goods, Japanese goods, British goods, etc., etc. So they are in recession and have been for a while. That's our take. Let's have a look at some of the questions before we tell you more about the dead zone, the famous danger zone. Very worried about crypto now indeed, says a gentleman, RK. So what does this mean for crypto? Let's have a little bit of a look at Bitcoin. So BTC, as we've said before, needs proliferation. And we've always warned there's this wild card. We've also highlighted that before you're really pumped, last time, you actually had a demand destroying event over here. So that's down here. So we are looking at this. By the way, you guys are welcome to use super chats to get your questions answered. If it's available, that is. I'm not sure it is. I'm looking at my tech people and they're going, no, he's gone and said something stupid again. Oh, okay, sorry, it's only on Market Sniper, it's available. We'll see if we can get it available for you here at some point. So that sell-off actually was the run-in, and then, only then, just before, it looks like September, beginning October, did you get your moon run on Bitcoin. So there is possibility in our broadening structure, you dip again, there is possibility in our broadening structure, having got to the midpoint, that you dip back down again. And you could even go all the way to the bottom of the side. That doesn't mean you have to make a new low. We'll have a look at that in a bigger time frame, a lower time frame actually. Sorry, let's do that in a lower time frame. So you're looking a little bit sick. We thought you'd creep up. We're actually on the short time frame. We were wrong by this. We must absolutely say it. We thought you were going to get an upside creep. You did to that point, and then boom, this came in and came down. That tells me that there's a real softness to the market. We need to see Bitcoin get to this capping descending grind line here. And in actual fact, the more I'm seeing the yield curve, this is now the demand destroying. We've said there's this joker card that all our predictions can be wrecked by this joker card. And every time we're getting closer to, we think Bitcoin's going to be okay, this joker card starts coming closer and looming. And that is the yield curve reversion. That card comes to play, you could get a spill to the bottom side down there. And especially on Bitcoin, it is safer to be in something like gold for the reasons we highlighted. You had 70K, and on this one, I think it's 48, a 30% overall drop in Bitcoin. By the way, on Sunday, when everyone started getting scared on the US session, the other markets hadn't opened, it was Bitcoin that started selling off first. As a market that has some liquidity on a Sunday. So that was one of that. Gold is looking great. So I want to take you back to the safest thing you should be holding, the gold, the gold, the gold. By the way, for gold investors that say, I don't need technical. Technical sounds stupid. I don't want to learn anything new. I'm just an investor in gold. What's the value in HVF method for me? Why would I need to do it? If gold's going to win, I'm investing in gold. I am where I am and I don't need anything more, etc., etc. So here's the answer to that question. If you are a gold bug, and you're right to be a gold bug, and we're gold bugs too, here's the answer to that question. You will get countless opportunities in a strong bull market where the judicious use of some leverage with HVF structures on smaller time frames will give you really tight stops, super expansive blow-off rewards that will give you massive multiples to have leverage profits at the same time as being an investor, which can then be converted into further gold investments and wait until we get the next such setup. In fact, inside our community, we are awaiting gold setup. But just before we leave, I want to show you this macro chart and say, guys, this is a ripper. This is a ripper of a structure. So I've just wanted to show you everything since 98. Now I want to just zoom in on the better bits. So here's where you are. Since that once, twice, three times a lady, fourth time you break, that turning there that we said could be the one, that candle, when we said it, that one could be the one. You had this broadening structure coming down, show you that. You have had one month. Since this month, when was it? It was October 23rd, recession. The data came in for recession. In a recession, you have had gold deliver 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months, if we assume this month is closed, 10 months out of 11 of upside. You had one tiny downside. I'm going to count the doji as flat as a green month. So you stood still there on that one. So you've had essentially 10 out of 11, let's call it 9 out of 11, one sideways month, one minor negative month. That's how it's gone. And in actual fact, from that sell-off, you've done brilliantly as well. 3 base lows. The third, the pullback, the turn, this has been a net long gold period. And the amount of amazing structures that you've had, nearly all of them. And one of the great examples, we gave this one out on YouTube as well, for upside, was this particular HVF structure. And it was a little bit foxy. It gave you a bit of a bloated, you first thought that was it. And then there was a little bit of a and then you go, okay, you're extending your second impulse a bit, and then it did that. But eventually it wins. And because we are investors and we are gold maxis on account of the proven history of millennia, and not 3,000, 4,000 years, guys, 10,000, 20,000, God knows, maybe 100,000 years. This gave such an amazing entry, super tight risk-reward ratio, blow-off target, and an ability to overperform. And then you missed the chop and the dull bits because you closed the bulk of it there, and you had a little bit left in, which is still good now. Now, by the way, when the demand-destroying event hits, that's not to say you can't sell off a little bit out of this at some point. So we will be choosing our opportunities carefully, but we think there is a chance again that you will be going, and this is on a much smaller time frame setup, for the upside on gold. So even if we break out of this little fella to the downside and it comes down here, it's my expectation you won't go too far, because guess what? Institutions are starting to wake up to gold. Institutions are starting to wake up to gold. And the net upside break here is going to be taking you towards 2,600 potentially and beyond. And we, gold investor, will be helping you get more gold by trading just gold. If you only want to trade just gold, just trade just gold. Stop, entry, high reward to low risk, known loss. Maximize this move in your favor. There are very few long-term avid sellers of gold. Even the miners are expecting better prices now. It's starting to turn. Yes, indeed. And very soon you'll start to see a response in silver too. But, well, I wouldn't say very soon. We'll see it when we see it. But it's going to be the next stage. But we're going to ride the gold stage hard until the market tells us that there's something even better. Then we're going to change to trading silver long and being investors in silver and turning silver trading profits into even more silver to ensure you become one of the biggest physical holder private investors in your local neighborhood and district, although we advise you to keep it stum. You know what I mean? And that will set you up for the life and of your dreams, and probably your family, their descendants as well, if you do this properly. And for those of you of lighter means, just starting out, not coming from a family precious metals orientated, start using the bullion vault link below. You can do $20 a month. You can do £10 a month. By the way, buying gold, pure gold. Rest of the world, guys, pure gold. Use them. You'll pay what I pay. You'll get consultation. You'll get it delivered to your door. Very reliable, no problems. US guys, ITM trading, link below. Buy gold. You hear it from me, hear it again. Debt collapse. What did Greg Maranino say that was of interest when the beginning of that video that I didn't do a particularly good job of showing you? He said he showed you two items. A bank telling you to buy gold. What did I interpret that is? Banks need to establish alibi, that they didn't only tell people to do garbage stuff. Remember the .com and all those free emails coming out about it's a pile of crap, tell them to buy it, issue a buy notice. It kind of hurts that. It's bad for reputation. It's good to have a couple of record moments where you say, hey, you should buy this thing that actually turns out okay. And the Deutsche Bank saying short debt. Well, let me tell you something. Deutsche Bank knows about debt. Deutsche Bank was the idiot in the room buying all the subprime debt from America. That's right, yep. Contaminating, ensuring the spread of the biological virus of debt throughout what was an American story, ensuring that it became a global event. They exported the bioagent of contaminated debt from the subprime into the most astute banks, supposed to be the Swiss banks, UBS, Credit Suisse, now properly wrecked, Deutsche Bank, now properly wrecked, other German banks, to be many of them, Commerzbank amongst others as well, properly wrecked, to ensure zombie institutions and a controlled demolition of the Western bank systems, which is why we continue to talk about the decline of the West that is part and parcel of this entire process. You are at peak Western. It is only down now. And you can see this with the governments of the day, their creeping totalitarianism. There is no truth to a real capitalistic nation of freedom and liberty in the West anymore. In fact, you will find more of those things in ex-communist countries than you will find in your current capitalistic country that is absolutely not capitalistic. It's time to leave. It's time to leave. You need to think about that. But some of you will say, can't do it. I'm going to die fighting. Well, you're not a hero. No one's making a movie where it's, Custer's last stand. You know what's smart? What's smart is taking action, not showing inertia, and going where you're treated best. And recognizing a country that's imperfect, has lots of problems, but wants to go in the right direction. That is not passing laws in California where it's a misdemeanor to fiddle with children. That's right, my friends. That's where it's going. They're undermining your principles. They're undermining your sound money. They are absolutely peak debt, collapse. They're turning into Weimar Berlin, the little Austrian man. That's right. That's what you're getting. Anyway, here's a trade for you. It's for free. From me to you. It may work, it may not. If you understand HVF fully and you understand that, we will talk about how we'll place our stops. We'll use limit orders. We'll maybe wait for that little setup, try get in there, have a stop there. We'll get the setup and we'll have a target and it'll be somewhere off the screen up top there, potentially in risk reward. Once that setup has moved, we'll trail that stop from there to there. And then when we get the third impulse, the stop will go from there. That means we're no longer on our $1,000 allowed loss on our 100 grand account. So now we will add further sizing at this point, and that is how you multiply your way to wealth. We may even get a primer setup that you can learn all about. Many of you think from watching YouTube you know all that you need to know. Well, I'm afraid you haven't got the half of it yet. And that's what we aim to do. You can watch us and you're not coming to school. You will just be doing to make money and learning at the same time by doing. You want to get someplace? We're going to put you on a bicycle and you're going to join us riding there. You're not coming to learn to ride a bicycle. You're just ending up on a bicycle while doing something fun, making money on the way to the promised land of wealth, freedom, and liberty, as opposed to being inert and staying where you are and being in fear and saying, oh, but that means I have to spend some money now. It's an investment. It's an investment in your future. It's an investment to build your wealth and freedom around like-minded people of high quality. You are a summation of the 10 most people that you follow and deal with and have around you in terms of energy, insight, and wisdom. Make sure you upgrade your peer group into people that are focused on the core things in the core times. Guys, this is single-mindedly the biggest historical, financial, economic event. I've come onto YouTube to tell you that you're about to find out a name. You are about to find out a name for another crisis. You could even make some money on puts on the dollars or various other things. There's ideas. You can discuss all of that in a community of like-minded where you understand method, leverage, and money management. I'm not going to do that here. You'll blow yourself up and you'll hate me for all the wrong reasons. So guess what? you need to see the opportunities that crisis brings. The Chinese have a phrase for crisis, and it is opportunity and crisis. It's two separate symbols that talk about the night and the day that the night brings. Because every night has a morning, and every evening has a nighttime. That's how it works. And everything bad brings something good. The opportunity for somebody to do something good. Because most people want truth. Most people want liberty. Most people are sick and tired of being slaves in a cabal system that is run and ruled by perverse psychopaths. Most people just want to get by. I'm one of them, and I'm here to tell you how to do that. I want to help you. You need to help me help you. Remember Jerry? Say it loud into the phone, Jerry. Say it loud into the phone. Help me help you. That means you've got to get on the phone and the links below. Book a call. Start asking for the help you need and recognize you have to respect someone, and the way we do that is money. And then begin the journey of being in a better place. Being in a better place in 1 year's time, and being in a substantially better place in 3 years' time, and actually being enriched by this entire process in 5 and 7 years' time, whilst others are hammered and are still in your old home street, still getting taxed out of their properties, still getting immigration exported to them next door, people pitching tents on their front garden they can't chase away, police coming for their social media posts but won't stop the people stealing their cars. You are right where it is. What are you going to do? I'm here to tell you, you're about to find out a name. And that's what I'm telling you today. So let's have a look at questions after we've gone peak ranter. Yes, so, hey bro, Jake Cullen, Native American, long lived. Okay, an alternative to traditional, now bought by BlackRock. Yeah. The Prophet, yes, thank you. John the Baptist. I'll be John the Baptist. I'll eat locusts and honey. I've been out here in the desert eating locusts and honey, guys. Keeping it lean, ready with my message. The Messiah is coming. Well, first the crises, and then you get to be your own Messiah. How about that? God helps those who help themselves. That's what I like most. That's my favorite religious quote. Huge BTC crash incoming. It is possible. It is possible, market squeezer. It is indeed possible that you could come off. Tucked up in USDT, yes, and I don't think USDT is too dangerous. I think they need USDT. That's not to say it's not fraudulent and there's not scams and all, but I think USDT needs to be safe, because when they transfer the great X wealth of the collapsing star, your legacy financial system, it needs an umbilical cord to go into the new baby to expand it up to a similar size. You see, they don't want to get weak. They don't want to get poor. They want to stay rich. They want to have 90% of all the biggest shares going up. That's how they do. They run and rule the world and have the bulk of the wealth. By the way, for those that say Bitcoin is your savior and it is your decentralized money, I'm here to tell you, the biggest quote of Rothschild is, I care not who maketh the laws, so long as I issue the money, and I issue the money. In other words, the understanding of the most famous quote is, if you are the person that creates liquidity in the central bank, you own the people who make the laws, you own who gets prosecuted on those laws and who doesn't. Because there's so many laws, we're all guilty of something, but some people are being chased for social media posts, and other people aren't being chased for starting wars that lead to absolute genocide. How does that work? Because the system is owned by the money issuer. The ultimate wealth is the ultimate power. And the ultimate power is never to be given up. It's not in their goals to give it up, because they'll be lynched. They'd be lynched by the time people got their mittens on them. So from that you conclude, they, meaning them, the legacy families of millennia, will never let you have your own issuance or system of money. Let me say it again. They, the people that run the system, the one thing they understand as a minority of few is that they own and control a weaponized money system that puts you on the wrong side of a tertiary compound equation, and that is the ultimate mathematics of power and control, debt-based slavery. And the way they can do that ensures that they are incredibly wealthy and powerful. It's easy to always hire somebody when you have ridiculous amounts of money. They will never let you have your own money. Bitcoin is not your own money. They have a plan for it. They either seeded it or they already control it during this process. And my guess is they seeded it from the very beginning. Coincidentally, it showed up at 2009 after a major debt binge and a major collapse. Coincidentally, it's a guy who disappeared called Satoshi, not someone Western, although Bitcoin was largely seemed to be a Western investment forum. It's that guy who disappeared. He disappeared and left it all behind. That totally unnatural human being that didn't want to collect any awards, prizes, or anything, and he just slipped away. They sell you lies. They create your heroes for you. Okay, so beware. We trade it. We'll even invest in it if we think it's going up. We do not marry it, we do not love it, and we trust very few. Gold, however, unique properties of millennia, is special. They can't make it. They make diamonds, they can't make gold. Okay, guys, so let's see what else you've got before we wind this out. Don't forget, the book a call link. We have 1 or 2 TMPs available, so they've been non-available for an extended period. We're making them available in small number again. And of course, the self-studies with payment plans, where you still get plenty of interaction with us, all beautifully explained to you by the friendly person you'll speak to, who will place you under no pressure, and for which 14 days money back without a question always exists once you see what you've engaged with. It doesn't cost a lot to make a call. 5 minutes of your time in booking and 25 minutes in attending. So Argentina, Colombia, people are asking about places. I get this often, so I'll answer you. There's no perfect place, first of all. So any country I say, everyone will go, but, this and that's crap, and this crap, and this crap, and that crap. Make it a non-Western nation. Now, if you aren't concerned with Russia and Ukraine war escalation and the Middle East, you can look at the Eastern European nations. They did communism. They're far smarter than you in recognizing the Ponzi schemes. The Westerners are gullible. They've done the communism gig. They don't sleep on this thing. They'll be better off than Western Europe. So Hungary, Serbia, lots of beautiful, beautiful places. Buy in for cheap while you still have wealth. You see, the thing is to trade out at the high at some other place that's lower, that's on an upward trajectory, while your old place is on a downward trajectory. You see what I did just there? Do you see what I did? It looks like I'm doing a slow motion, pretty bad breakdance, isn't it? Well, the key thing is many people are going to sit like deer in the headlights and they're going to stay here. You see what I did? They're going to stay here and they're going to end up there. And the guy that moved to Serbia, Georgia, is going to end up there. If you want outside of those Eastern European nations, Indonesia, Bali, you name it, great. Panama, certain Latin countries, not all of them, certain Latin countries. You can have a look at them. You can look at Uruguay. You can look at Africa. Yes, I said Africa. I believe I said Africa. I love Southern Africa. It's most underrated. Everybody thinks it's the crime capitals. Now we don't hear headlines of Cape Town, the crime capital of the world, because there's a township where everybody wants to copy the American mobsters and gangsters, and it has less bearing on where most people live. No, now I hear Dublin, that in 2003, I just saw a tweet today, 2003, Dublin, the safest city in the world. 2024, Dublin, the most dangerous city of the world. I'm watching them take all the bad PR tags away from beautiful places to live, like Cape Town, beautiful places, in other words, Namibia, Botswana. I'm telling you, you can have unbelievable existences. And the key thing is they're coming for the West. By head count, by financial, they want to strip you of your assets. They're going to squeeze you into concentration camps for sins. This is the Bolshevism of this era. You are going to see what Russia experienced in 1912 through to 1917. The West is queued up for that experience. Same perps, same modus operandi. Tools a little bit more advanced nowadays, far more advanced, same vile, torturous intent. Get out before you have to, because this process can suddenly do that real quick. And then there's no buyers, except BlackRock, for a pittance. You see how that works? So it goes slowly at first, the West versus those BRICS nations you look down on, those other nations that are not even BRICS or anything else, and then it goes suddenly. And it's too late suddenly because everyone else has woken up at the same time as you. There's no buyers going in, only BlackRock. That's right. And boy, will they make you crap offers. And boy, will they make it expensive for you to go. California being charged if you want to leave that state. Americans get charged if you want to hand back your passport. They're going to be doing the same in Canada. Leave now. I know you're not going to listen to that one, but that's it. Guys, I'm going to finish here. The crisis is coming. This is a reset. You're going to find out about it. Choose from the buffet of reset topics. Real trades are being made available. Real trading opportunities to build wealth, preserve wealth in places which are not controlled by the same nation state that you were born in, you bank with, and that your passport's with. It's time to start moving. Go where you will be treated better. This is not a battle for the last stand into some grim, grimy death. That's stupidity. Don't fight a game you know you'll lose, or you should already understand you'll lose. You are not as big as the systems they have put into place, bringing this apart. Don't throw yourself under that steamroller. It's an unnecessary experience to have to encounter. You can go and have an amazing life somewhere else, build wealth, and in actual fact, while sounding like a doomsday black pill guy, I am actually showing you a promised land with real opportunity the minute you are prepared to move. By the way, you don't have to move to start already benefiting from building your wealth. You can start that process first. Click the link below, many options to suit. Thank you very much for watching, share, like, and appreciate. The yield curve is going to revert. Gold could be and will continue to be a great investment in our opinion. Much bigger numbers than many people realize. It's going to get disorderly at some point, almost certainly. The debt markets are in trouble. Forget the fact that there's rate cuts. I don't know how many you'll get and for how long, but it's going to be a minor pullback in the end on an ever-escalating rate spike. Get yourself out of debt and build your holdings in gold. Till next time, we catch you later. Thank you very much for watching, and we appreciate all the interaction. Goodbye.